Hey, good evening, everyone. Can you hear me? Let me allow you guys to talk. I'm giving everyone access to talk, so it's easier and more interactive. So can you guys hear me?
Yeah, we can hear you.
Yeah.
Brilliant.
Yes.
Brilliant.
Yes.
Okay. So people are still signing in, so let's just give them a few minutes, if that's okay.
Hello.
Hello.
Hey, good evening.
Hey, hey, good evening, everyone. There are still a few people trying to get in.
Hey, guys.
So I think we can get started. Okay, so we also have Corey, who works along with me at City Falcon, and then Dimitros, someone who's regularly presented and also writes for Seeking Alpha. So guys, to start with, let me apologize. I got I got tested positive with COVID yesterday, so I'm a bit slow. Yeah. So if I pause a little bit, just bear with me. And then this is why I have Corey. He can take over from me if I can no longer continue the discussion. So yeah. So guys, I think a lot of you have already been on the meetup before. This is like a community. It's not me trying to just give you my ideas, but it's an opportunity for us to discuss our ideas with each other. We are not advisors. We are not recommending for you to buy or sell anything. You decide. Let me just move this actually. Yeah, you decide. We just discuss, and then yeah, if you're playing with leverage products, be careful with that. So we are a group which is kind of pretty global now, across several countries, and it's great that it's growing. This number is actually close to 7,000 people now. We've seen a big jump in recent times, given the performance in the markets, not only stock but crypto and everything else. If you're looking for any of our previous presentations, any information, it's on cityfalcon.com/meetup. So feel free to download the stuff from there. And once this presentation is done, we'll put that up, and also a link to a recording of this webinar. So if you wanted to watch that again. So before we jump into it, and I can see there are more people trying to get in. Okay. I wanted to run a poll. So this is the first one, just to understand, what is your experience? So do you guys see a poll on your screen now? Yeah, okay, I can see people marking it. Almost there. Okay. Yeah, so let me see if I can end. Yeah. So you should be able to see the results now. And interestingly, okay, we have a lot of people less than 1 year and they got more than 5 years, which is interesting. In only 2 complete beginners. For the beginners, please do stop and ask questions. If you don't have access, raise your hands through this or use chat, whatever you're comfortable doing. So just to continue, there's another poll that I wanted to check on. So because there are only 2 beginners, what is everyone doing in the market? Almost there. Okay. So very interesting. 33% wait and watch. Trading and rest is pretty much equal, which is quite interesting. Does anyone want to say anything at this point? Any thoughts on the market strategy? Anything that they're doing that they would like to share with the group here?
Well, just to say that when I said invest all in, all that means is I've remained fully invested. I'm not putting new investment money in.
Yeah, makes sense. And would you and again, you don't have to disclose it, but also in terms of, are you sitting on cash waiting for opportunities to invest, or like whatever you wanted to invest is in the markets?
I have some cash, but most of my funds are invested and have remained invested since the pandemic started.
Wow, congratulations. So you've done really well throughout this, riding the bull run. Anyone else?
Everyone hear me okay?
Yeah, go on, Simon.
Excellent. Yeah, I'm still very new. I've been doing probably, like I said, last sort of 6, 7, 8 months. So I suppose I'm all invested to a certain degree, but I've got stop losses as I'm sort of navigating my way through this sort of new venture, if you like.
Yeah, and how are you managing the stop losses? Because if there is high volatility, like at what level would you put it? Like 20% down, 30% down, 50% down?
That's one of the reasons I'm really keen to join this webinar. Actually, it's more than anything, I'm trying to learn as much as possible.
Yeah, okay, fair enough.
There's been times where I've dropped into the stop loss ever so slightly, then it shot back up again, and I just want to gain my experience. But I've sort of done around about 20%, 10, 20%, depending on which one I'm invested in.
Yeah, I mean, that's the exact reason, as you said, it could drop for a few seconds and then recover. I stopped using, stop losses 10 years back, just because I've lost money doing that. Yeah.
I think I agree with you. I think it doesn't go well with long-term investing. And I mean, if you do trading, probably it offers also safety. But with long-term investing, probably when you diversify, it's what you can do to decrease your risk at a very specific, peak that you have.
Yes, agree. Anyone else? Any thoughts?
Yeah, it's kind of, sorry.
Go on, ladies first.
Yeah. Oh, sorry. Yeah, it's Catalin here. So I have stayed, I had a bit of cash just before the market dip anyway. So I've kept my holdings that I had, but I have looked for specific pockets, areas that I thought, taking a contrarian view, that might do well after the crisis. So oil and gas is one area where I've made a couple of purchases, and those so far have done well, and I'm just going to hold on to those. Just look at what's just contrarian, really.
That makes sense. Yeah. Rob?
For me, everything that is invested is staying exactly where it is. And the only new money has been put into crowdfunding investment, so into startups, basically. It
So you're
seems to be a very
diversifying.
so, and if you're going to risk it, you might as well risk it.
Yeah. High risk strategy. Good. Okay. Anyone else?
I actually don't think I had cash for the past 18 years.
I know that's it.
As
Actually, exactly 18 years. It was when there was a hit on the Twin Towers, and that's the last time I had cash. I've never had cash. I always switch between investments. So it's interesting to hear the way you guys think about cash.
yeah, good to know, Matty. Okay.
For me, I guess I'm quite new as well. I've just been in it for a few months, since about July or August, using this app called Trading 212, and I just have bought some stocks on there. I'm quite interested in biotech and life sciences companies. So, I mean, I have some broad interests. I've dabbled with Tesla and stuff since that's been quite popular, but I'm quite interested to just see, what we can get from discussion, what I can learn.
Sounds good. Welcome. Welcome, Chelsea. Okay.
Yeah, I'm in a very similar position as well. Have a little bit of cash, and I want to come back in and start investing again. So I'm sort of leaving my holdings where they are, but I want to try and look at something new as well. Yeah, similar to Chelsea, I've been looking a bit about biotech as well.
Sounds good. All right. Great, guys. So let's just continue. So firstly, for people who've been with us in 2020, we discussed Slack quite a bit, and as a great product, and it was good to see that the company got acquired. I know a few people from the group had bought the shares, and they made up to 75% return, which is great to see as a community. So, and 2020 again wasn't an easy year in terms of picking stocks. There's a lot of uncertainty, especially early on in the year. So good on that.
So I think I saw this, and I had some and I sold them. Quite painful.
Oh, you had them and sold them, but yeah, that's life, I guess. Yeah. So this is something we discussed even last time, and I just put it up again. So I mean, this time's theme is kind of, I mean, everyone has a sense of what's going on in the markets, and whether it's a bubble, whether it's not a bubble. So not going to spend too much time on it, but just to kind of talk about, Elon Musk tweeting quite regularly, and he said, okay, in May 2020, it's, the stock price is too high, right? And if you look at the graph today, so when he said that, it was at $140. Now, when I took a screenshot of this, this was December. So now the price is close to $850. But this is the difference between, when he thought as a company was overvalued and where the price is today. Now, of course, between that discussion and now, there are a few things that have happened. So one is that, okay, it's part of S&P 500, which means that, anyone who invests in index funds forces passive fund managers to invest in Tesla. And obviously this can go up, but the extent has been phenomenal. So any thoughts from people on Tesla? I know some people said bought it. So have you bought it just because the price is going up? Do you have a price target? How are you playing Tesla at this point? Yeah, go on, Simon.
Being relatively new to the market, for me, it's something that I don't want to touch with a barge pole. For me, it's far too high risk. My personal view is, with a very limited experience, is it's heading for a massive crash. But being so new, I wouldn't want to put my money anywhere near it because I wouldn't know what I was doing. It'd be too much of a risk to me.
Fair enough. Yeah.
Yeah,
Others?
they're similar to my thoughts as well. It's far too volatile and too much on the sort of whim on what a few people say. So no, not for me either at the moment, not at this price.
I think so as well. I think electric cars we're not quite ready for the expectations that people have of them. I think there's just a lot of anticipation, but I think it's running ahead of itself. I think we're going to be using just cars and hybrid cars for a long time.
Okay, fair enough.
Oh, I'd like to just make a point as well.
Yes, go on.
Yeah, I actually I bought Tesla on the day where he tweeted that, just because I felt like it was such an outrageous comment to make. And I'd sort of watched a lot of Kramer who really liked the stock. So I actually bought on that day. And as you can imagine, it's been my best performer this year. So I'm not going to buy anymore. I'm just going to leave it, and I'm not planning on touching it.
Well done. Haven't you retired yet?
I think it might be an idea to just hold it for the long term and just see what happens over the years, because it does seem to compete well and do well compared to the other EV companies, I think. So with all the different governments trying to push for a green agenda, or trying to, like in the UK, trying to have more electric cars by 2050 or something like that, might be a good shout just for the really long term.
Yeah, definitely.
Yeah.
I definitely agree with
Yeah,
that.
but then I suppose it depends what happens with the bigger car manufacturers, and they are going to catch up at some point, and whether Tesla can actually compete with the bigger manufacturers in the longer term.
I have a general question. Did any of the investor in Tesla here watched yesterday the EV day of General Motors?
Haven't heard of it.
Okay, so this is quite interesting because you hold Tesla, you have probably a large gain because it skyrocketed, but many people didn't bother to spend time to understand what GM is bringing to market, and literally, I don't know how to say it in a nice way, but Tesla is dead. Like I mean, go spend some time, see the EV day from GM and understand what I'm trying to say. And there is a phenomenon, Uzbach, I don't know if you noticed, I bought some puts on Tesla just for fun, not because from perspective of I'm heavily shorting it or something. Since the day I bought the puts, the share is up 20% and my puts up 50%. So the volatility is crazy. There is no, how should I say it in a nice way? There is no like a really, really smart money within. It's a lot of speculative way inside it. But if we look from fundamental perspective, and especially for the new people here, it's very important not to just say Tesla will be here in the next X years because government, etc. Tesla enjoyed from something that called kickstart, head start for hitting the market with the EV when everybody start being hitting with the emission control and things like that. But that's it. This is over. I mean, everybody is entering the market in the next 3 to 4 years. So you have to take it in mind how Tesla will look like when the competition is going to be hard.
Yeah, I don't think. I mean, I don't know if Tesla is dead or not. I think that's probably a strong comment. But what I will definitely say is that in terms of normal fundamental valuation, in my opinion, it's really, really pricey and very overvalued. So when you look at the EPS, the earnings per share, and you just compound to a growth rate expected by the market, it just doesn't justify the current price by all means. So I think it has future, and sure it has made money to many investors. I think has maybe doubled, well, not double, multiplied by 8 in the last 9 months. And I don't disagree on investing on that. I definitely think that is, by traditional measures at least, overvalued. And that's why I didn't invest. I'm kicking my head. Well, I'm not kicking because I cannot stick to my principles. But I think, yeah, it's overvalued in my opinion.
the same arguments were 5 or 6 years ago, and I'm at the same camp that would say that probably Tesla is overvalued. But I can admit that I was saying the same thing in 13 or 14, and now I can say that the fundamentals have evolved in a way that those that they bought for 10 or 20 billion market cap in 2013, for example, for sure they have got this value, because even with current revenue, it seems that this valuation 40, 50 could be justifiable. So I would say that what we see now, like this 800 billion, some part of it is already captured. I wouldn't say it's 100% safe, but it seems it's based on current fundamentals, and the rest is perception. So, I mean, if they do it again, but they have to go beyond car. They have to go beyond, like 150 billion could be if they became something like GM, or all the rest now is just perception. So I don't know. It's a matter of what's going to happen. But for the moment, a part of the price is what is justified by the current numbers, and all the rest is just perception.
I think something worth noting with Tesla is, well, not just that it's the sort of the most popular electric vehicle manufacturer, but also the fact that they seem to be the only automaker that's able to produce fully autonomous vehicles. So I think the self-driving aspect that sort of Tesla offers, and the fact that they're somewhat of a tech company as well, is probably the main driving force behind the stock absolutely skyrocketing like this, and public interest in Tesla just absolutely growing exponentially, really.
So that's another interesting thing you're bringing up. If you do some check, you would see that the autonomous cruise of GM is actually 2 years in a row #1 without any problems, and Tesla is #2. So first, Tesla is not the first one, GM is the first one. And second, Tesla is behind GM in autonomous cars and technology. And actually GM is gonna be the first one with 1 million mile battery. So there are so many things that it seems that people that buy in Tesla are behind just what Tesla and trying to justify the price. It has nothing to do with that. It is just take the market share. That's how I look at it from a really simple perspective. There is certain amount of cars sold per year, and Tesla, in order to justify this price, need to sell 35% of the market share of worldwide auto sales. Now, if you believe it's gonna be, so they're fully priced. If you think it's crazy that one company will control all this share, so they're way overpriced. And I think it's very simple common sense. And at the end of the day, I think we all need not to forget Tesla technology, no technology, whatever you want to call it. It's an industrial company that will make money by building cars, not by selling their architecture, not by selling their technology, because they're playing the game like the ecosystem. It's not open source. And that's why there is competition coming. So I don't know. It's a really interesting discussion, and it's
yeah,
just
Matty, yeah, it's a good point. And I guess just wanted to say this was just initiating a discussion. There are a few points in the presentation around this, but it's good to hear you. And Rob, you raised hand. Sorry, we didn't allow you to speak. So if you want to quickly give your opinion, Rob.
I mean, to be honest, I kind of agree with several people, including Matty. I waited quite a long time to actually see and get up front and close and personal with a Tesla, and have to confess, very disappointing experience. It's like, well, so what is the fuss about? And, Volkswagen, Range Rover, Jaguar, GM, Ford, they all have vehicles out which are already successful, but now high-end luxury electric versions. They will get better, and they're just going to push Tesla back. Tesla, I see as this being a niche vehicle manufacturer in due course. Is it going to be the Ferrari of electric? But it's not going to be what people thought it was going to be anyway. I think it's overpriced, simple. And the market will realize that at some point and it's going to come down. There's nothing special about a Tesla. It just got there first.
Yeah, no, it's thanks though. So guys, we'll continue at this stage.
By the way, just a joke. Even if they will be the Ferrari, they still need to go down 75%.
Well, there you go.
So there is a just on the joke beat, there is like one of the memes circulating, and I forgot to put it in the deck today, which was a bank firing someone who used the F word on the trading floor, and the F word is fundamentals, right? So a lot of the people, a lot of the price action that we've seen in the market, people are trying to justify the price action rather than the other way around. Which is kind of dangerous, which is reminds me of 1999 to some extent. Yeah, so
actually,
let's
can I just ask a quick question here?
Yeah, Brian, go on.
So my question is, has anyone done a discounted cash flow analysis of Tesla and kind of worked out what their stock price should be?
So I have personally not done a full discounted, but I've looked at a simple calculation that I've put later on in the pitch in this deck. Just looking at the enterprise value and looking at revenue and whatever number you want to add, whether it's the Ferrari or 100% market cap, 100% share. I don't have those numbers yet, but we will talk about one of the research analysts on what they talk about Tesla. Brian, if you just hold on to that. Kaushik, quickly, your comment.
No, that's fine.
Yeah, it's okay. No, I was just saying, Kaushik, you raised your hand. So do you want to say something?
Yeah, sorry, I was on mute. So I'm hearing multiple conversation points about Tesla right now, but we're talking about the patient and not the disease. And the disease is that we have gone from monetary stimulus to fiscal stimulus. So the point is, the world is pumped with cash, and Tesla is just an extreme example of ridiculous stretch of valuations, if you want to call it, nonsensical storytelling, backing a company. But this narrative is no longer only restricted to equity. It's going on across a variety of sectors. So I mean, whether you want to classify buying Rolexes as an asset class, people might not know that from January 2020 to December 2020, the premium on the average stainless steel Rolex has gone up 50%, which means you can't even go to a dealer and buy a stainless steel Rolex. You have to buy it off the gray market, which is another byproduct of the liquidity in the system. Bitcoin, another example of one could classify as a byproduct of the system, and even gold is at an all-time high. So it's just become a question of we're talking about Tesla, but Tesla is the patient. It's not the disease. The disease that's going on around right now is that there's a run on the US dollar, and anything which seems to have quality, whether it be a Rolex, whether it be a Bitcoin, whether it be a car company that's a sector leader, valuations are stretched to a point which have stopped making sense.
Yeah, Kaushik, and this is part of the presentation as well. You're exactly right. I didn't know about the Rolex thing. Quite interesting. Pretty much everything has gone up.
Yeah, so I mean, it's come down to a point where if in the month of March you'd gone to the Rolex dealer and he had sold you a sports stainless steel Rolex, you're getting 40% more for that if you sell it on eBay right now.
Yeah.
Yeah, some of the Daytonas and Sky Dwellers secondhand are ridiculous. Like if you can get your hands on one, then you can sort of sell it for a good 20% higher.
Yeah, and people talk about cash flows and intrinsic value. I'd say Rolex has less intrinsic value than Bitcoin, but it's behaving in the same phenomenon.
Yeah.
All right, cool. Let's continue, guys. So I I monitor a lot of forums, and this is for my business. We look at a lot of things. And I didn't hide any names because this is all in public forum on Facebook, so it's fine. But the kind of conversations you see today, and again, Facebook may not be representative of the whole market, but it gives you, a sense of what's going on, which is the retail audience. You see more and more, brokerage accounts being opened in the last 1 or 2 years. Several people getting stimulus checks, putting them in the market, and everyone's pretty much just looking at the price action, right? The F word, the fundamental word, may not come in, as because as everyone said, there's so much money that has to go somewhere. So you will see a lot of these conversations online. This is, and it's quite amazing. And you will see the responses as well, which is, unbelievable to see. I think also from my personal experience, and you guys can tell me if you are different. I think if you started investing in the last 13 years, you haven't really seen what a downside to the market could be. And maybe because of that, the older generation of us, we are a little bit more conservative compared to the newer generation, which hasn't seen that fall. And personally, I've seen companies trading at, price earning ratios of 3 and 4 in bad times. So just again, there's one more example I think I had was, this is more like a meme, and then I hope this is not true, and it's probably not, it's a 24-month, but it was just literally everyone trying to take their money and say, okay, this money is not enough for me, and I need to be doing more. So any thoughts on this? Any thoughts on the retail audience? I mean, are you hearing conversations from people that would typically not invest in stocks or cryptos or Rolexes are suddenly thinking, okay, where should I put my money? Are people experiencing that?
Yes, if I can add to that. I've been in the stock market for six years now, and I've never had so many questions from friends with no investing experience at all, asking me to give them stock tips, to invest their money for them. And my parents, who are super risk averse, even mentioned or asked me to open accounts for them that I could trade in. And that's all because their pension money is not giving them any returns, of course. There's also, perhaps to finish, there's a famous quote I remember, and it's from, I think, a famous fund manager. He said, when the cab driver is giving you stock tips, that's the time to get out of the market. So I feel this, we are at such a time, exciting time, actually.
I think also what is clear is that there's clearly more people jumping into the market. It's never been that easy to open an account with a brokerage, index fund or ETFs, which is really low cost and it's really accessible to anyone really. And also on top of that, I think it's the recent stimulus that we are getting through the economy, and that also translates onto the stock market ultimately. So it's been just going up and up and up despite the crisis and the pandemic. And I suspect, I mean, no one really knows, but I suspect it might still continue to go up as inflation also continues to go up in the future. So I mean, it's just, I think it seems that there's more money being pumped into the markets, which is a big bubble. I don't know when it's gonna burst, but I think in the very short term, it doesn't seem to go down, which is a bit dangerous or scary.
Yeah, fair points. Yeah, agreed. Rob?
I was wondering, has anybody looked at where the growth in the stock market valuation is coming from? Are there just like 5 stocks where all this growth has come from in the last 10 months, or is it broadly dispersed? Because that could provide an indication of what's driving it.
So, I mean, I think, so one of the slides coming, which will talk about asset classes, and again, stimulus and other things. So maybe that will answer. I don't have exact stats. I don't think anyone has. I mean, people blame Robinhood users, but I don't believe personally that, even though they are large in volumes, but I don't think they are really the ones that can move the market. But that's usually what you hear on the media. Sorry, Rob, you want to go, or your hand was raised from before? Okay, anyone else?
Yes, I still there's a lot of room to grow because a lot of us people are in lockdown, and I can only speak for Belgium, but in a couple of months everybody will be celebrating like it's the 1920s. And I can see a narrative already playing out. We're talking about the new roaring 20s. So imagine just having this major enthusiasm still pumping up the current prices. I still I want to speculate. I can't. I'm only speculating about the future, but I think we haven't seen the top yet, and I'm just curious to know what everybody is thinking about that in the group. Does this make sense, or will there be no roaring 20s at all? Because there's a lot of cash, there's a lot of savings, and everybody's just dying to get out and spend a lot of money. But that's just my feeling.
No,
Yeah,
you're
David,
right.
I think a lot of people are asking that question. Yeah, sorry, go on.
There is definitely a pent-up demand in the market for many things. And for example, I'm from Israel, and we're now at the third lockdown. And you could see between lockdowns how the pent-up demand was so aggressive. So, for example, if people could go to restaurants, so they were packed, you barely can find a spot. And then when you had another lockdown, so again, everything is empty. So I totally agree with you. I mean, people anxious to go and spend. And for example, if we had the second lockdown on Monday, so people were hitting the mall like it's the end of the world, even though they had the whole weekend can go to the mall. So it's definitely, I agree with you that there is going to be a massive spending, and I truly believe that when all this vaccine will be the spot of hotels, hospitality, anything to do with spending and money and seeing your friends and just breathing some fresh air is going to be another way to spend money.
Yeah, yeah. I guess the question with that is that right now the money is being spent in the markets, and then people spending actually on goods, buying an iPhone or a car, whatever.
Right.
That goes in a different direction than the jump that we're seeing in the markets, because fundamentals are not important at this stage anyway. So Apple sending more iPhones, for them to be from $2.2 trillion in market cap to go upwards, they need to sell quite a lot. And firstly, they need to justify the price if we look at that fundamental.
No, you're totally right about it. 100% right.
Any other thoughts? Sorry, Igor, you wanted to say something? And Simon?
Can you hear me?
Yeah, go on.
Okay. So my point I want to make is I'm not sure the recovery probably will be there, but I'm not sure if the market will go continuously up, because market is shows the anticipation of the recovery. So we are already pricing in that recovery. Otherwise, we wouldn't be where we are right now, in my view. So probably economy will do well, but I just don't think we have a lot more room to run up. Generally, I don't know when the market will go down, and I agree with the speakers previously that the valuation is crazy, but it can just be in this limbo situation for a really long time, considering that the amount of money they pump into economy is just unbelievable.
Yeah,
Yeah, fair enough.
the funny idea, I think, if I'll take what you're saying, and this really, actually, you spot I would say the mismatch is that you see Tesla at a multiple of, I don't know, there is no even multiple, but on the other hand, you get an hospitality company that if tomorrow everybody will be with the vaccine, so that's it. It's gonna be busy place making tons of cash for the next many years, right? So why this trading at I don't know 10 times earning or 7 times earning on 2019, and Tesla get that much of price. So I guess that's my point of not getting this market. So
I guess the question worth asking is, we've discussed Tesla, but besides Tesla, what other EV companies can actually catch up and beat Tesla, since we seem to be theming this conversation around Tesla?
Definitely GM, in my opinion.
In Europe, I think Tesla now is number 3. There, it's I think Volkswagen and also Nissan, Renault with I think it's number 3 now, and it has just 25-30% of the EV market in Europe. In the US, there is not a significant competitor.
Yeah, in the US they still have the largest market. I think GM is the only one that's gonna hit the market pretty aggressive already this year. But
And within the new startups, has anyone done any work on the EV space with the new companies like Neo or something like that? There's a bunch of new EV names.
Yes, they're quite popular as well. So guys, may I request that I think what is going on is, there are some people who want to speak as well, and we not giving them an opportunity. So let's please start using raise hands in the, I think it'd be easier for everyone, please. So just to answer your question, Kaushik, probably startups now. And the idea was not to focus on the EV space in particular, but I think it was just an example with Tesla, but we'll continue discussion with other things. Peter, your thoughts?
You're talking very much about the market being overheated and the valuations being very high. But looking in the UK, of course, where I am, there's still a lot of companies that dropped at the crash and have only partly recovered, sitting somewhere between half to 2/3 of their valuation back in February. And that's hospitality and it's airlines. So when things reopen, there seems to be a lot of upside left in those. They're not overheated at all.
Absolutely agree, Peter. And this is what we've seen. There's a lot of money that has gone into a few companies or a few sectors or a few indices. And there might be an appetite for other companies. So on that thought, let's continue, guys. So just in the interest of time. So this is kind of an explanation on different asset classes. And you will see like which ones perform. So I think just the way to read this graph is on the left, you see how down had it gone in 2020, which I'm guessing would be around March 2020. And then what were the returns for the whole year? And then from the low in 2020. So you can see that silver has done really well when you consider from the low. I wasn't even tracking silver, so this was a bit of a surprise for me as well. Gold has been, has done reasonably well. 30% is a good return. Yet it's not as high as the others. US small caps, US stocks, 70%, 100%. Corporate bonds, 10%. Emerging markets up as well. Treasuries up as well, quite a bit in relative terms. Canadian stocks. So, I mean, everything is pretty much, gone up by the end of the year at a general level. Any thoughts on asset classes? Anyone playing in commodities, silver, or anything else? Yeah, go on, David.
I've been a bit of a gold buck since many years, just to hedge my stock portfolio. So I'm in physical gold, and I have 2 ETFs, junior miners and regular miners. I've been a bit disappointed by the role of gold, and I believe, or from what I've read, I have Bitcoin to blame, which is taking over the safe haven perception of gold. I don't know what thoughts are there. I'm not very a Bitcoin believer. It's super. It's hyped, like the Tesla stock. Just from looking at the volatility of the price gold, I believe it still deserves to be perceived as the safe haven asset class, and not Bitcoin, of course. If you look at just volatility, it doesn't make any sense. So I'm a bit disappointed in the returns of gold, but it has managed to do its work for me, as I prefer to be in gold than to have my money in my bank account or my cash reserves in the bank account.
Yeah, we'll talk about Bitcoin quite a bit as well. Yeah, Emmanuel.
Yeah, I think probably gold and silver are okay ways of hedging against inflation. I don't disagree with that at all. But me personally, I don't invest on things like that, commodities or Bitcoin, just purely because I'm not able to calculate intrinsic value. So though I think it's a reasonable investment, and definitely within market panics and inflation will keep their value better or even increase. I just think that it's not for me because I'm not able to really monetize and calculate what it's worth really. This is my opinion.
Yeah, makes sense. Agreed. Simon?
I was just going to ask more like the group, for maybe more towards yourself and people with a bit more experience. As a fairly newbie, this isn't something I've particularly looked at. Is it something that us new people should be looking at rather than just your sort of standard stocks?
I would say no, generally, because I mean, yes and no is always the answer, but no, because commodities are a bit trickier to manage. For example, we saw with oil, a lot of people lost money in April when they did not understand how oil is being traded in the markets. So buying commodities may not be that easy. However, you could go into ETFs. So that's why I wouldn't do it. I think stocks are much simpler. The reason why you should do it though is diversification. Right, as David mentioned, if you're not getting interest rate, if you're not getting interest on your money in the bank, and if you want to make it work, and if you believe one of these things could help you do that, whether you believe it's gold or something else, you could consider it. But again, it's the whole idea of, as value investors, we need to understand why, and we need to have a rationale why. It's not just the price action. And anyone else wants to say anything for Simon? Okay, all right, let's continue. But guys, in general, as we saw, and as Kaushik mentioned, right, everything has gone up. There's so much money, and historically we've said, okay, equities work in inversion with other asset classes, and none of that is happening. It's just the scale of returns is different. So I think, so in terms of S&P 500, and I know, I think someone mentioned UK, and I spend a lot of time in the UK as well, but US markets are just easier to work with. So, but I think US markets, the international markets also look at the US for guidance. So there's a lot of similarities there. So as expected, IT is at the top, and IT is interesting because some of the things that are mentioned today were things that were known in the past. But again, as we discussed earlier, some of these things are coming up to justify the valuation. So we had one analyst, I forgot who it was, saying, hey, the reason why IT stocks should be valued higher than other companies or the traditional companies is because they're more scalable, right? Because when Facebook has every additional piece of advertising revenue, there may not be any incremental costs. So, the marginal revenue is, marginal profit is quite high. But these are things that are already known. This, if you've been in this space, you know this for 20, 30 years. Consumer discretionary was interesting because, hey, people are not actually buying that much in 2020. People have lost jobs. But again, the liquidity helped it, communication. And then in the bottom was energy. And I think it was Kathleen who said, she's buying energy stocks. So yeah. So you can see where the things have gone down. I've been looking at real estate, not buying property, but looking at some kind of ETFs that could give me exposure to real estate. So I'm doing that research for my own portfolio. And any thoughts from anyone? Sorry, healthcare. Healthcare, I guess, is important. I mean, I mentioned to some of them on the call. So I have COVID right now. I got my results yesterday, so I'm dealing with it now. And what I'm thinking about is not only what I'm going through now, but it's also the long-term impact on everyone's health. And so healthcare definitely looks at an area that I would look at investing for a long term. Yeah, Rob?
Yeah, I'm not sure I agree with you on the consumer discretionary spend going down. If if there's one thing I've heard throughout 2020, it's spend has gone from retail online, and everybody online is expanding and increasing their profits, and that's everybody from Amazon to ASOS. People are spending now. Whether they should or shouldn't, I don't know. And what they're spending, is it debt or is it cash? But to go back to one of the earlier points, there are a lot of companies that are doing very well out of what's been going on in 2020. There are those that obviously hit hard, but I think consumers are still spending and spending hard. Whether it's out of boredom or frustration, I don't know. But I don't think there's any real sign of them not spending. It will stop or slow down, it has to, because unemployment is going to kick in and start hurting. But I think people are still spending.
Yeah, so Rob, so I agree with you. I think Amazon's a good example. I think, and correct me if I'm wrong, but I think consumer discretionary, a move from, your street to online is still part of within consumer discretionary, right? And I think the second thing is a lot of people have lost jobs. And so while we may hear of the people who are, who are well-to-do like us, yes, we're buying more on Amazon, but the average person might still not be able to do stuff. And then what about iPhones? How many people have been, would have bought iPhone in 2020? I know some of you guys are Apple fans, as in investors rather. So I don't know the numbers, it was just a guess. But yeah, more thoughts, welcome. Max, what do you think?
I just had a question with regard to ETFs, because I'm setting up a fund for my family, and I'm just trying to. I always kind of saw stocks as being a bit more fun and could be a bit more exciting than ETFs, but then I do think they're a bit of a safer way of investing. So I wonder what kind of proportion of stock to ETF you think would make up like a medium risk portfolio.
Yeah, I mean, we've discussed this for ETFs, and again, anyone else wants to chip in. Lot of the money has been going in the index ETFs, so S&P 500 and FTSE and all of this, which has been driving the prices of a lot of these stocks. And so we might actually see a bubble that might be building in those ETFs. And as the market goes down, these might be the ones that might come down heavily. But then you could have other ETFs, as we talked about, wherein exposure might be difficult. So if you wanted, instead of holding gold, you wanted to have a gold ETF, it might be easier. Not an expert on diversification between stocks and ETF. I would more think about asset classes. And so if I'm investing in equity, I could break it into stocks or ETFs that relates to stocks. So I don't know. Anyone else wants to help him out? Igor, did you have anything on this topic?
Yeah, just for information, I've been a veteran in ETF space. I've been doing research since 2006. So I have a lot of knowledge in that. So the question is simply placed incorrectly. In a sense, ETF is just a wrapper. Basically, as Warren Buffett says, diversification is a protection from ignorance. If you have some kind of idea that you have an edge on a particular company or stock, you should definitely look into it and take a bet. But if you don't have much knowledge and you simply want to cover the market, ETFs is a great ways to do it. But keep that in mind that some ETFs are very niche. They can, like specialize in particular, not even sectors, but industries, or could be even like something really niche like 3D or 5G technologies and stuff like that, where you have only about 20 components, or it could be a really broad based. So if you, interested in doing some specific exposure, it's probably a particular stocks would be better if you do some research. But if you just want to cover certain, areas as a blanket, ETFs will provide you with that exposure through any asset class, pretty much.
I'd like to add a quick point, and I think this is a recurring theme I see on the meetups, which is people, the last time I was on this meetup was I think in March or April last year, where we made a bottom. And this time when I'm on the meetup, the vibe is, when is the top? and I keep reiterating to myself, is it's impossible to catch bottoms. And I remember in the last call, someone said, oh, I'm not investing because I think a new bottom will be made. I'd like to reiterate that, I think a central philosophy is stop trying to time the market, but understand your capital duration. If you have money in your bank account that you don't need for 10 years, your view on that money needs to be very different from the part of the money in your bank account that you have for 1 year. Because we're never going to catch the bottom, and you're most certainly never going to catch the top. And I think the point on ETFs the gentleman raised, I think the difference between investing in stock and investing in ETFs is, forget what Warren Buffett says. A lot of the stuff he says is impossible to implement. The difference is that when you invest in ETFs, you develop discipline. While when you invest in stocks, it becomes very hard when the market is bleeding to deploy money, because what you're in effect doing is you're buying a stock you have insight on, and a month later you will see that stock is lower further, and that takes significant discipline to follow. The good old saying, buy when there's blood on the street. It doesn't work, because when it's your own blood on the street, it's impossible to buy. So I think the edge of ETF over stock picking is that it allows you to develop a discipline. And I think everyone on this call should do an exercise. Go back to your brokerage spread betting accounts and see if you had the courage to invest last March, April, May, when the market was at the bottom and it was looking like we were going to keep making new bottoms. And I assure you 80% of this group would have not deployed any capital at that time. So, the advantage of an ETF is it takes out all those emotions and allows you to redeploy every month.
Yes, systematic investment plans.
And brings in the discipline of investing every month rather than investing on emotion.
Yes, thanks, Kaushik. Matti?
Yeah, so 2 points on the ETF side. First, for the latest comment, the whole idea behind Warren Buffett comments about ETF is that if you actually, when you see the march, you don't touch your ETF. And I guess 99% of the people, when they buy the ETF, even if they bought it for the diversification and they understand and they look at the long term, at the end of the day, if they open the app and they see their ETF crash also like the broad market in another 20 or 30%, instead of adding to the ETF, so they selling. So it doesn't necessarily say anything if you buy a straight company or buy an ETF.
The data contradicts that. Over the bottoms, the funds have not been selling because there have been no redemptions, or the redemptions have been relatively weak to direct sales.
The fund, you mean the active fund, not the passive fund?
No, I mean passive funds. So from whatever I've read, passive trackers did not have redemptions at the same rate as direct equity during bottoms.
That's for sure. You will never gonna have the same rate, right? Because you have much long-term thinking money or pension money or people that are managing it through the IRA and they don't touch it. But the idea is that I agree with you on the ETF as long as you don't touch the ETF. I mean, you buy and hold forever as long as you don't need the money. So with that, we're in agreement. As for the ETF, buying ETF, I think many opportunity arise in ETF, at least in my 21 years in the stock market, especially in volatility. So for example, last year, the best ETF you could buy, last year, right? I'm not even talking about this year. I'm sorry, I meant 2019, not 2020, was actually the house builders in the US. So yeah, you could go like me, do analysis for a company called LGIH and buy straight the company. But to be honest, if I would just buy the whole ETF on the house builder, I'll make fortune as well. So I don't think it's right to take out the ETF. And for example, now, if you look, Uzbach, if you're in UK, you're probably following the ETF in UK of the dividend company, where ETF in UK, the culture of public companies in UK is paying dividend, and the dividend were cut because of being cautious because of the all the COVID, and today you can buy those ETFs still at like 20 or 30 or even 35% below what they were like, I don't know, a year ago. And if you optimist and you look forward and you believe that 10 years from now the world will be growing and not shrinking, so here you have an excellent investment, but just again, buy and don't touch it. I mean.
Thanks, Matthew. David, last comment on this before we move on.
Yes, very interesting discussion. Should we buy into ETFs and forget about our investment, or should we invest in single stocks? Just to give some new people in the group an understanding of this, and to throw out another Warren Buffett quote, he says, "The very definition of risk is not knowing what you are doing." And I think that's very helpful to understand, especially when you're starting out. Someone in the group mentioned, who's new in investing, I'm considering biotech stocks. There, I would definitely go for the ETF approach, where you buy a biotech ETF if you want to, if you think that biotech will of course evolve positively, but definitely do not touch a single stock biotech single stock, because to me investing, and this is a value investing group, to me investing is all about fundamentals, is about evaluating the management, is about reading annual statements, is about really understanding the business. And that's the whole beauty, the whole fun part about investing, to me personally, is really getting an understanding of economics, microeconomics, macroeconomics. That's the whole cool thing about investing. That's why I'm so passionate about it. But when I don't understand, or it's difficult for me to understand, or I'm just lazy, like I have an ETF in gold miners, I don't care about gold miners, just want to be hedged. There I take stance. I will not put in extra time, study time, so I will just buy an ETF. So that's just as a tip. If you don't understand the mechanics behind the stock movement, the company, even the industry and its competitors, then please reconsider and go to an ETF, and you don't have to worry about it. You will not beat the index. That's the whole definition of an ETF. It just follows the index. With stock picking, I managed to beat the market every year. I've been very fortunate because it's been a very good market. But that's the cool thing about stock picking for me, is that you can beat the market more easily. And also an interesting remark, who was buying in March? Well, I was, because when over the years you start having this instinct for the markets. If you follow it almost every day, like I do, you will become, you will start seeing, becoming a contrarian will be much more easy. And you get like this decoupling of your emotions with the market. And that's a very interesting progress. So for those who are new into investing, I promise you, if you work at it and if you follow the markets, if you're invested with your own money, you will make mistakes, you will learn out of it, and you will become a better critical thinker, or the definition of a contrarian. And you will start buying into bear markets and selling into the very bull markets, and especially now the bubbly markets. So I just wanted to mention this very interesting discussion. And especially
Thanks,
don't buy into single stock biotech if you're new to investing.
Thanks, David. Guys, let's move on. Otherwise, we'll be here till midnight. Just quickly, the stocks that did well. Of course, we talked about Tesla, but more technology companies, Nvidia, PayPal, Etsy, AMD. So it was pretty much a run for these companies. Yeah, don't want to spend much time on this. Technology did well, as we saw as a sector. Apple again did phenomenally well. So 2.2 trillion, which is crazy. It's I personally feel is overvalued as well, but it did 80%. For 2 years, which is phenomenal for a company this size. So yeah, it was a phenomenal year for technology. So Bitcoin, we've spoken about this, and I live in Malta now, so it's the discussion in the gym locker room a lot of the times, and we were discussing about trading strategies. And I mean, I don't touch Bitcoin. I usually just get my popcorn and I watch the market. But we looked at, for example, with a couple of traders saying, okay, 20,000 was where, it stuck, it couldn't beat it. And once it goes up, it could go to 23, 24. But what was really shocking was how it went to 40K, 40,000. And then again, with Bitcoin, what is amazing is having tracked this for a long time is that the use case keeps changing. And I think Malta definitely it's a little bit further ahead. So when Bitcoin started, it was a transactional currency. So, you're going to buy your pizza with Bitcoin. Then it became a stable asset like, store of value like gold. Some people today in Malta talk about how it could help the unbanked in Africa. So, they could be using Bitcoin. And at this price, I guess, $34,000. I don't think a lot of people can afford that, especially the unbanked ones. But anyway, the use cases keep changing here. But the jump has been phenomenal, right, to 40,000. So I'll hold the Bitcoin discussion. We're going to discuss this much later in the conversation. Igor, was your point on Bitcoin? Did you have a quick point?
Yes, I just wanted to correct you in a couple of things.
Sure.
First of all, there's a book that I read recently, and I think it's done by a British guy. It's basically basic about Bitcoin and cryptocurrency. And it's a very well written book. Basically explains how the whole thing operates and what's the ideas behind it and if it's worth or not. So the book doesn't really take sides. So almost non-biased book. That's one thing I want to point out. The second thing I want to point out that you said with the Bitcoin being part of the use as a currency in Africa per se, it doesn't really matter what the price is because you can buy fractions of Bitcoin. So you don't have to buy the whole thing. That being said, the things you pointed out in terms of as a storage of value and stuff like that, it's more kind of circulating and in use, and each user decides for his own basically use. Mostly obviously is the speculators, but the beauty of this particular product per se is that it can be many hats, kind of many things for me. It can be many things for many people in a sense. Now, in just a few more comments I want to put in perspective of the value, I'm been skeptical on Bitcoin for a really long time, but I have to say I do own some, which I purchased about probably in October or September. And the reason why I did that, because in my calculations and my expectations, I thought that the risk of getting in and the upside is well worth it. Obviously, I would not suggest my own limit. I would not put more than 5% of my portfolio into Bitcoin, and if it goes over 20, I will trim it to 10. The idea is, if we're going back to a conversation about Tesla, for Tesla's valuation to be as it is, it has to be, has to fill the market with the cars and basically be the only one car provider, more or less. With Bitcoin, it's completely opposite story because Bitcoin could fill in a huge gap. And it seems like, again, it's not guaranteed because there's a lot of cryptocurrencies and other can kind of move in. But Bitcoin seems to have a first mover advantage. And there is once the volatility is subdued, which might not be anytime soon, it could become a legitimate, in a sense, asset. So I don't know what it's worth. Maybe it's worth only $40, not 40,000. Maybe it's worth $4 million per Bitcoin. I have no idea. But in my personal view, without no hard numbers and feeling, I just thought the risk and rewards tilted into that it's worth taking the risk.
Thank you. So Igor, it's a long discussion. We can do it over a beer. I think it's going to take. My only point on Bitcoin is, so I avoid taking sides because Bitcoin is a religion at times. Also, we have some clients who use Bitcoin, so I have to be a little bit careful. My only point on this is, imagine you're starting a company, right? So I run a company. I think Rob runs a company. A few other people. You have to first prove yourself before your company is worth of value. In case of crypto, it's the opposite for Bitcoin. So you have all of these ideas, okay, it can do this, it can do that, but it's today valued at 650 billion without achieving any of that. Well, it should be the opposite.
But
Right,
I'm
and I
sorry to
think
tell you that statement makes no sense because no one owns Bitcoin. Bitcoin, I mean, you can be part of the Bitcoin blockchain. You just have to download the software and mine and contribute computing power. So from a single enterprise point of view, that statement is right for Ripple and privately owned blockchains, but Bitcoin there's no owner of Bitcoin.
No, I didn't say the owner. I said I don't see any use, like until it's been, like if you talk about, let's say for Africa and unbanked and using a fraction, I want to see that happening first before I give it a value of $650 billion. That's my only point.
Oh, you mean value? Yeah, well, the only value of Bitcoin is the only perceived value for Bitcoin is it trades about 100 billion a day. Oh no, sorry, it trades 100 million a day. Wait, 1 second, let me get that number right.
No, the volume is around 18 billion. You can see it on the screen.
Yeah, sorry, it's 80 billion. Yeah, 100 billion
18
a
billion.
day. So
18
what
billion.
1
See that.
second.
It's here on the screen.
Well, the volume I see on my screen is 50 billion pounds, which is 65 billion dollars.
Okay, I guess it's different. I guess. Okay.
All
But yeah,
right.
anyway.
So the volume published on Coinbase is about $70 million a day, and that 70 million of volume is bigger than I think the total traded amount of most stock markets in the world. I think there are only 15 stock markets that trade more than 70 million a day. So that ends the discussion about is it
But I
tradable,
think
because it's
it's
trading
not
right
bad.
now. It's trading more than probably the top 15 stock markets.
But Kaushik, this is the thing we're discussing, right? Which is what demonstrate this. What you're talking about is the price. What I'm talking about is the value, and those are different things. So I don't see any personally any value, even though I actually don't want to take sides at this point. But show me the value, and then I can justify the price based on that.
Sure, yeah.
Matthew,
Just
you want
one
to say
point.
something? Yeah, sorry, go ahead.
This is kind of maybe it's the misconception in the sense of it's not the company you buy it, as he pointed out. It's the same as a currency. If you would be interested in buying US dollars, or if you're interested in buying gold, how you would determine the value? It's simply supply and demand and belief that it will be exchangeable for that particular value.
When I can buy pizza as much easily with Bitcoin, I will agree that it's a currency. Anyway, Matty, last comments before we move on, please. Yeah.
Yeah, regarding this point, I'm always trying to think about the Bitcoin from this perspective, and I'll be happy to hear how you guys think about what I'm saying. At the end of the day, we all look at Bitcoin and we call it a currency, right? We don't call it as a gold or something. We actually calling it currency. So one day this should be a currency that we can trade with. Now, let's leave the world of investing, and let's say one of you is a merchant and you have a business. And currently, if you will sell goods in your business and exchange them for Bitcoin, so you have a volatility in a currency that day later, after you went to sleep, the goods you sold worth now 18% less in value. So your cashier is definitely hit big time. Can you explain me and show me one reasonable person that will take such a risk in his business, now gold scale business, worldwide businesses, that will do that? So as long as you cannot create a business with Bitcoin to really be a business, it just cannot be justified whatsoever. And that's how it is. And the fact that people buying it or appreciating in value, supply, demand, this is all, in my opinion, and sorry for saying that, it's a bullshit, because supply and demand was also on the tulips in the 1800s. So what? Supply and demand doesn't create value, as Uzbach said. It just creates bubbles. And I really trying to understand the point of view about Bitcoin from perspective of the real usage of that. I would think that the only usage of that is for terror, to exchange money with each other. but not more than that.
Yeah, thanks, Matthew. So guys, let's move on. This is a long debate.
Right.
And I hope everyone who invests money makes money. So, everyone's happy. So quickly, in terms of the companies that on the other side, so companies that lost money in 2020, right? This is what we discussed. So oil and gas, hospitality industries, airlines, all of these. So these are the things that we see. And these are things, something that I'm also looking at saying, is there value in any of these companies or as a sector? Again, as David mentioned, if I'm not good at picking, maybe I can pick up an ETF, maybe in one of these sectors in the long term. I guess the challenge with some of these companies is that when a downturn like this comes for their industry, where no one's going on a cruise right now, can they survive that period, right? Do they have enough cash? Do they have to repay any of the debts? So survival is important. And then if there is stimulus from the government, at what terms are those stimulus given out? So if you remember our conversation last year where Boeing refused help from the US government because they didn't want to give an equity stake to the US government. So how does that reflect? So anyone has any recommendations to the group in terms of any companies they're looking at in these sectors or ETFs or anything else? Matty, did you have a point on this?
Actually, I have. Well, I like Baker U. I like their exposure to conventions and to malls and things like that. They have pretty solid balance sheet. You can see some gurus buying behind them, like Bill Ackman. So it seems like a very solid and business that can go move on. What else I like? As I said, I like GM, although they jumped recently, but they're still pretty solid business, trading at a very low multiple. And KAR is an interesting company, KAR Auction. It's a company that actually doing all the auction sales for the second-hand market, and this market is booming, and this company invested in the past few years heavily in the online, and actually it was amazing. They thought that it's going to take them 3 years to be fully selling fully online, doing auctions, and they actually did it in 3 weeks during March. So I think it's also a good company with the solid balance sheet. So there are many companies that just look for the balance sheet, and you can call them cyclical, but the cyclical that survive this situation, they're gonna be just much stronger, and they're gonna consume much larger market share. So that's how I would look at things. I would just point something, especially to the new people that joined this conversation today. For example, I see Carnival Cruise in this list. Many people tend to look at the price that were at peak in 2019 and the price today, and then they saying, okay, let's say 7 years from now, when everything is going to be back, so this price is going to go back. This is very false, because you have to take a look at companies that actually raise capital, and raising capital, it's diluting the shareholders. So for these companies to go back to the price they were a year ago, it means they need to go more than double than what they had before. So the earning needs to be more than double than 2019, for example. So it's just a point I would take a look at.
Thanks, Matty. Maybe if you think it's if you agree to it, some of these companies, if you could mention in the chat so people can see them. And also, guys, there is a good conversation in chat going on. Just remember that when you respond, if you respond to only panelists, then only us, 2 or 3 people can see. So David, your responses are going to only panelists, while you have to select all panelists and attendees for everyone to see. So just keep that in mind. Rob?
Yeah, I can't say I'm any particular expert on that many different stocks, but I've always liked Ryanair going into the pandemic. because they had a very large cash balance, so they're in a very good position to weather the storm. And they're also, at this point, probably one of the best airlines in Europe to bounce out of it and exploit the opportunity, because working on the basis that everybody's going to want to travel immediately they can, Ryanair can change their pricing model, they can exploit the opportunity, and undoubtedly will, very easily. And whilst the share price isn't exactly low, it's not particularly high either. I think there's some opportunity there. I suspect that this year they're going to do very, very well out of the recovery from the pandemic, because they're going to hit the market harder than a lot of other airlines will be able to, because they're just slower at doing things.
Actually, you actually raise a really interesting point. I was pretty heavy investing in Ryanair during the actually 2 months after the crisis, because they were crazy cheap, and I looked from perspective, as you said, because they had a very solid balance sheet and you know, being optimist and stuff like that. And I have to admit, I sold them when they hit the 14.5 pound. And the reason I did that is that Ryanair for many years were the lowest cost producer, if you may, and probably the best operated, not just airline, but best operated company I've seen for many, many years. That the CEO there is unbelievable. The problem is that many governments rescue their airline, like Lufthansa, for example, and basically erase the debt they had. So this by himself give a big competitive advantage to be competitive with Ryanair on pricing when everything will be done. And I guess that's the only thing that I have problem now with Ryanair. If you guys, if you like Ryanair, I would take a look at Jet2. It's also in UK. The only gem I like about Jet2 is that they have another business, which is the logistic business. But on the side of the flight, Jet2 is concentrated on vacation. So basically, you like buying a vacation company, which is a very big business in the UK. So I'm not saying Ryanair still is an amazing company, is a very good company. I agree with you on anything you said. But from price perspective, I think Jet is more interesting. I'll put it also in the chat.
Okay, Manuel.
Yeah, I think I just wanted to raise, sorry, to share my own experience. I also bought Ryanair on the pandemic, not at the bottom. So I bought it while it was going down. I believe at €9 per share. It went down, I think, farther than that to 6 or 7, something like that. And I sold it recently, I think about 13 or 14. So although I didn't make a huge gain, I think I didn't want to hold on to it because I thought it had recovered quite a bit of the potential gains. And though I think if I would have held on to it, I'm not denying, I'm not saying that it wouldn't go farther up in the future. I think the opportunity cost also of having that stock would mean that I probably can use that money to buy other stock that I think potentially is gonna give a better performance in the long term. So that's why that's really the main reason I decided to sell. Not because the stock don't think it's gonna perform relatively well in the future, but because I think has recovered most of the ground that I expect it can recover at least in the next 3-4 years. So I think the opportunity cost of having the stock still there in my portfolio was too low. I could do better with having another one with potentially better gains in the future.
Thanks. All right, guys, let's move on. And guys, there are some people are facing issues with enabling their mic. If you do, just message me or just raise your hand. Yeah. Okay. So, I mean, we talk about price action, and this was the other discussion between price and value. So if you think about what has happened, obviously people have lost jobs. And the thing that I hate most is the divide between the rich and the poor. And this goes up further. So these are some numbers, World Bank Group that came out with saying okay, we were doing really well in terms of controlling poverty, in terms of who are considered poor, and now that is changing, right? And that's gone back to the level, at 2015 level, or at a different level, 2016 level maybe. So we've lost a few years here, which is quite sad, not for us, but the others. And then if you want to read a very depressing report, you should look at this report, which is 12 charts. It shows you all the things that have gone wrong. It talks about GDP data worldwide. It talks about the debt situation. It talks about who controls debt where. So China controlling a debt in a lot of countries, in Africa, all of that. So it's worldbank.org, and it's one of the blog posts. It's quite interesting. I didn't replicate it because I think it's quite depressive, which is unfortunately what 2020 was. So in reality, everything has gone wrong, but the markets have gone up, right? And so what has changed this? We already discussed this. So it was the stimulus, right? It was printing cash, it was buying securities, and printing cash is one thing, and giving out people, helping people, fine. Buying securities had an effect of government supporting corporate bonds, junk bonds, means that it's promoting taking risk. So it creates a risk on approach, which is obviously created. Again, there is being short on anything doesn't help. So just buy and hold, and so everyone's been buying everything. And the second thing is fear of missing out, right? And fear of missing out affects us in kind of all aspects of life. Not only money and markets, but could be relationships, could be other things. So do people understand fear of missing out? Anyone doesn't know what it means? Okay, cool. So fear of missing out happens, in the market at different levels, which could affect the market. So as retail investors, we look at Tesla and say, okay, my neighbor made 9x the money on Tesla and I didn't do anything. And you see Tesla going up 5% more. He's like, if I don't jump in now, I'm going to lose that opportunity. So that's the, or Facebook group, someone talks about, hey, I made just money, blah, blah, blah. And the problem with this is, with the retail audiences, is that people boast when they make money, but no one talks about, securities or when they lose money. So this is like social media, right? Everyone portrays the nicer picture of themselves. And so this forces retail audiences to jump in and take a risk. With asset managers, I mean, you need to, at least match the index. If you don't, your investors are going to take your money back. You're going to struggle, right? So you have to be in the market. So again, you're forced to take exposure, even if you think the market's overvalued. And then interestingly, research houses, right? Sell-side research, who come up with reports saying, okay, you should be buying Apple, the target is this, that, or you should be shorting. And they have been caught out, right? Because they had low targets on stocks, or they had, let's say, fair targets based on value, but suddenly, everything is based on price action, everything is based on printed money, then the valuations don't matter. So I wanted to show you, let me show you an example first. So this is around Tesla, okay? And I know it's a lot of text, but it was quite interesting for me to read. So RBC kind of had a sector, they upgraded the sector perform, but the earlier target they had was $339. Now imagine you as an analyst sitting there while the stock price is at 700, 850, you're going to look like a real fool, right? And so they came out with this report, which basically said, okay, we got it wrong, which is fine, which is, everyone makes it. But what they gave the rationale was quite interesting. They think that, Tesla's ability to take advantage of stock price to raise capital is what has helped them, and is something that they didn't realize.
But sorry to interrupt, but apparently that's fact, because Elon has done 2 rounds of capital funding on the new valuation.
Yes, but that doesn't justify the increase in the price, right? If I raise capital at a price, yes, it's less dilutive, but it doesn't justify me being valued at 800 billion
Sure.
valuation. Yeah, that
Sure,
was
yeah, absolutely. It's just that he did act on the speculation on
Yes.
his own stock.
Yes,
Guys,
and
it's interesting to point out, because the 10 billion looks like for everybody, yeah, now Tesla have a lot of cash. GM yesterday announced $27 billion investment in the next 4 years to the EV market. And this is GM with already many factories, all architectures, thousands and tons of logistic ready. They're gonna spend 27 billion. So Tesla issuing $10 billion is gonna give them nothing if they really want to have 30% of the market share.
Yeah, no, so Matty, I agree with you. So my point was showing you this is not, I'm not agreeing with what the analyst is saying. I'm saying because the FOMO has hit and they had to come up with some reason to say why are they increasing the target from 300 to 700, and this is the reason they gave, which I find quite strange.
And
It
I
has
play
nothing to do.
the devil's.
Sorry, go on.
My point is that I mean I told earlier that I think that Tesla is very expensive, but they say that Tesla is the first auto manufacturer in the US that that managed to emerge as a successful startup after 1925, after Chrysler. So this is a big proof that they have done something significantly different in 100 years. They have done something that it's much different. So if we think it that way, probably they have this DNA. Now they have done the difficult thing. They are the only it's the only company that from a seed they became a small tree. So now they have a lot of possibilities, much more possibilities for beating those big companies. That's again, for me, the problem is the valuation, but that's another opinion of justifying how Tesla could beat GM or others.
Yeah, it's I mean, Elon Musk as an entrepreneur is great, right? I mean, I'm reading his book, and the businesses, the way he's done is phenomenal. So I agree with you. I think it's, as you said, it's a question of valuation. David?
Yes, just to comment on your remark here, because it looks kind of off. You have like this bearish stance, and then suddenly they switch to a bullish just to follow the market, and they come up with this crazy argument. But this reminds me a bit of .com, where analysts had to, or were pressurized to come up with a decent argument of rising stock prices. And I think I read somewhere that eyeballs were taken into account. The amount of eyeballs a website could lure or could receive. And these kind of metrics were invented just to justify the rising of stock prices. And this reminds me of that crazy behavior back then in 2000. I don't know what your idea is. Perhaps this could be like they also
I think
say that
what I've learned is with analyst reports, you just read them as a consolidation view. You can't take them too seriously because the point is, like you've correctly highlighted, they can switch view at a flip of a switch. There's a significant amount of conflict of interest, and these reports are all extremely biased. So as we have RBC on screen, a large Canadian company is rarely going to get a bad review from RBC if RBC is if RBC is their investment bank for deals. It's just how the world of big finance works, and most people accept that. So whenever I read an analyst report, I just read it to get a vibe of the situation. I don't take it very seriously. And that would be my advice for most people, because if you're not in the banking system, it can always be very intimidating. A friend giving you a report with Goldman Sachs titled on the top, but time and again, from my experience, the word Goldman Sachs means nothing. It's like there's a saying in the markets that in the technology world back in the day, you don't get fired for buying Microsoft shares, or you don't get fired for buying IBM shares. Similarly, you don't get fired for saying, I made a decision of Goldman Sachs, which is why I'm justifying this report. But in terms of reality, most of these analyst reports are just to give you a flavor of things. They're not the Holy Bible. or
By the
close to
way,
it.
as for the IBM, there was a saying that say the IT person, you never get fired for buying IBM. I think everybody's getting fired now for buying IBM. So
Thanks, guys. So guys, just going back to so that was just an example, but anyone has any thoughts on, the rally in 2020, what the points I pointed out, anything else that I'm missing here to share?
Can I make a point?
Yeah, sure, Sam, go on.
Yeah, I definitely think someone mentioned it. I think people have also just got spare money. Like I personally would normally be doing, I love horse racing, for example. I'd normally be spending a lot of my time and money going horse racing. I'm now not doing that, so I've got spare money and I'm using that money to invest instead. I think there's a lot of people out there, friends and colleagues I'm talking to, who, like you say, with the fear of missing out, have got spare money, looking at an ISA at 0.5% and going, oh, I'll try trading 212 as Chelsea mentioned, or I'll put some money in. And I think that's definitely bringing new money into the market.
Absolutely agreed. I think you're right. I think the low interest rates and, as you said, there isn't anything else to do if you're stuck at home. Absolutely right.
Yeah, I
And
think
this
the
is
big macro trend beyond this, which doesn't get spotted, is the number of people who are gambling has gone up. So the new number of poker players and people visiting online casinos has also gone up exponentially.
Yeah,
I've also been hearing the possibility that banks could start charging interest or start charging for deposits, which is something that I personally haven't known during my lifetime. But if that happens, people are not going to want to keep money in the bank.
Yeah.
there was also the decrease in the sport betting because of the lack of availability to do some soccer games and things like that. So that's also, I believe, push a lot of people to the stock market. All the sport gambling, that's something that it's known. So.
Yeah, that's what I mean. David?
Yes, I want to reiterate. I've never seen this crazy market, but I'm also 6 years now stock investor. But this is crazy. I'm really uncomfortable with the situation, and I think we haven't seen the end of it. I think there will be some really roaring 20 style outcome first, second quarter of this year. And of course, there's the inflation ghost of inflation that will perhaps make an end to that party. But that's just my view, of course.
I mean, you're right, David. I mean,
sorry.
Go on, Manny, go on.
No, I just wanted to ask the last person that spoke. Wouldn't you think that inflation will go on favor of stocks? So at the end of the day, the stock prices is just a multiple of the earnings, and the earnings are kind of affected by inflation anyway. So I think the stock market is a good hedge against inflation.
Probably exposure to banks. That probably will be the best way to hedge against inflation while being in the stock market.
I think that the challenge with inflation is that if it goes beyond the limit set by central banks, then interest rates will have to be increased, right? And if interest rates go up, I remember when was this? I don't know, 2006 or at some point, I forgot when it was a long time back, where literally just the talk of interest rates going up after they being flat and the markets crashed. Because that means that, businesses will have less money, it would be more difficult to borrow. And so that will affect their, return on equity capital. So that's why I think inflation is quite important to watch.
Yes, and I think inflation is going to come back much sooner than people anticipate. I think there is inflation already. There is real world inflation. It's just being hidden by the inflation number. And I think, and that's why I think when this ends, this will end particularly badly, because when rates go up, stock multiples compress. And in the event of extremely stretched multiples, those will compress the most. It's classic equity market cycle.
Agreed, Kaushik. And Kaushik, you're right, because a lot of the reported inflation number would have lower energy numbers right now. So the inflation number might not look high, but on a real, on what we as individuals see, the inflation can be seen, I think. Yeah. Rob?
Yeah, I think the inflation is rampant, and I think just like like all big macro finance, the traditional inflation number is redundant. It's just that no one's bothered to move away from it. But the day they even slightly recalibrate and move away from it, it's going to cause a panic, right? It's a classic capital market saying: is while the music's on, everyone's dancing, but the intelligent people are keeping an ear to when the music's going to turn off, and they will lead the rally on the downside, or they will lead the bear market.
Well, Rob, quickly.
My concern more than anything else is how governments react to the debt that they're taking on and the insane amount of money there. And whilst they're printing it, they're spending huge amounts. And what is it? The UK is now up to 300 billion of extra debt and growing. That's got to lead to tax increases. And that's a concept that many countries have not really been familiar with for the last few years. They could be quite significant tax increases. And I think when that happens, if that happens, of course, there'll be a very rapid contraction of money that people are spending. Could be a bit of a shock to the system, that one. That's my concern going forward.
Absolutely. And I think some of the countries, I think UK, US, they have the power of dollar and pound because it's being used globally, but some of the other currencies and countries might, default on the debt, which could, again, start another contagion. Okay, so guys, I'm going to push forward because we're running late. So a quick poll, and guys, be honest, okay? It's just for us to see. So the question is, did you buy any security because of FOMO in 2020? So just because you saw, okay, I need to jump in because I'll lose out an opportunity. Okay, almost there, 80% there. Okay, we'll accept this. So you can see the results. So yeah, 36% said yes. And I think FOMO hits everyone. I think we're all humans. It affects us at some point or the other. I guess most people just improve over a period of time. Cool.
And become more aware of it.
Yeah, yeah.
And I also think there's a good saying, which is that in bull markets, invest first, investigate later. And that's really the FOMO that happens in bull markets.
Yes, agreed. All right, let's move on. So, sorry, we're talking about Tesla too much, but it's been in the news. So Michael Burry, the big short, he's been accumulating shorts, and I think he claims that he's been buying more because I think the way it's moving is crazy. To be honest, I did hold the short in Tesla last year at some point, but I didn't manage to hold it for more than 2 weeks. And that was a trading bet. It was just because it just moved so quickly. And I had my stop loss got triggered. And I was looking at put options like Matty did, but the price was crazy. The volatility was so high. So, I mean, there are a lot of charts and you will see about what happens with the bubble and you will see how the last leg of the rally is crazy. I mean, we spoke about 1999, which I clearly remember, where companies used to just change their names and the stock price would go up. So something internet limited, something computers limited, and the price would skyrocket. So something like this is happening, or you could see another 2021 massive bull run because it's the last leg. So no one knows when it's going to end and no one can time this, right? So you decide whether you want to be in or out because the decline could be very steep. So Corey as an in-house American, and I just wanted him to run through what impact Joe Biden would have on US. So Corey, you want to take over quickly?
Yeah, hey guys. I see that this is a very talkative group, so I don't think we'll be able to get through all of these in the next 15 minutes or so. So I really want to focus on two of them here, healthcare and the China relations. So yeah, as everyone knows, I mean, next week, Joe Biden will be sworn in as president of the United States, and Trump will be on his way out. Depending on how the impeachment proceedings go, which are ongoing actually today, Trump might be out a little bit earlier. But so Joe Biden will definitely be coming in next week, and also the Democrats hold a very thin majority in Congress, so they might actually be able to get some of their ideas through. And I think in the American political spectrum, Joe Biden tends to be he's a centrist Democrat. I think that puts him a little bit far on the right on the world stage, but in the U.S. he's on the left, left of center. So I wanted to talk a little bit about healthcare. Biden has shot down the idea of Medicare for all, but he is interested in expanding the public option, and he's also interested in lowering the Medicare age from 65 to 60, which would effectively increase the number of people that are on Medicare. In receiving a public option. And then he's also said that he would allow foreign drug imports. I think Trump started to do this with Canada, but I think Biden wants to expand this. So I'm not a huge markets guy. I'm kind of interested in what people have to say about how they think this might impact the insurance industry, and how the foreign drug imports might impact the pharmaceutical industry. So is anyone holding pharmaceutical companies right now, or insurance companies that wants to say anything about this? Yeah, go ahead, David.
Yes. Insurance, there's a very lovely, way overvalued fintech, insurtech company called Lemonade. So, but I don't know if that answers your question. So I'm in the insurance business. They do. They have like a blue ocean kind of business model, and so it's like really overhyped. It's very also an exemplary bubble stock. So I sold today actually, but. Yes, I'm in the insurance, but in the new kind of insurance, not in the classic insurance. So, but I don't know if that answers your question. I'm sorry.
No, I'm just kind of trying to source some thoughts here, because I'm not really into a lot of micro investments. So yeah, that's insurtech is an interesting area. I think do you think that insurtech will be able to benefit from more people being on a government plan, or do you think that the old model in the US will be better for them?
I'm not familiar enough to give a good answer.
Yeah, sure. Okay.
I
So
can give
yeah,
you
go ahead, Matthew.
I actually opened a position, not a large one, pretty small one, but this is for people with a strong belly. It's called eHealth. What eHealth is doing is actually a brokerage, insurance broker company for health insurance, for the Medicare especially. And the reason I invest in them is that they actually build a model to turn it to be like purely online, where you cut the large cost of your agents going to the house and try to convince the elderly to move from one plan to the other. And there are lots of issues with the idea of some accounting there. So unless you really know how to do this analysis, I'm not recommending. But from perspective of a company that has a lots of promise on the one side, trades at a very low multiple value price, I think it's a interesting company. And in regards to your Biden, it's also good because at the end of the day, Democrats want to show that they're reducing cost. And the whole idea behind eHealth is that they have high margins, so they can be very competitive and really reduce the cost. So this is also a good headwinds for them. Tailwinds, I'm sorry. So yeah, that's sort of my take on healthcare.
Yeah, thanks. I agree with your point that the Democrats want to show that this really this is a way to help reduce
Right.
insurance costs. Yeah.
By the
And
way,
so,
the Buffett and Jeff Bezos and Jamie Dimon project didn't succeed. They shut it down. So I always say if these three people didn't manage to cut costs, no one will be. So
yeah, that's like a scourge of the American healthcare system. The costs are always
right,
going up. Yeah.
right,
Um,
right.
So I also wanted to ask about pharmaceuticals. So is anyone interested in pharmaceuticals, or do they have any thoughts on how because the United States drug costs tend to be extremely high, and this gives pharmaceutical companies a buffer to put more money into research. But if there's importation from other countries, this might eat into the profits of the pharmaceutical companies, and of course bring the stock price down, potentially delay some drug development, that kind of thing. So does anyone have any thoughts on the pharmaceutical companies and how government healthcare might impact them, or drug imports? Yes. Okay. So I think well, it was only a couple minutes. I'd like to skip down to the China relations, because this is also a very broad part of the policy. Famously, Donald Trump was pretty unilateral in his approach to China, and Joe Biden wants to take a much more multilateral approach. And Biden is interested in working, I would imagine, with particularly with the EU, to curb some of China's economic power. And it's interesting. I think a couple of days ago, the EU signaled that they might be entering into a trade pact with China, which would cause a lot of pressure for Biden, trying to get the other democracies to push back against China. So China is also moving ahead with their Belt and Road Initiative. I don't know if everyone is familiar with Belt and Road Initiative. It's a massive infrastructure investment in a lot of developing countries to try to rebuild a Silk Road kind of idea. So I'm interested in hearing if anyone has exposure in emerging markets, particularly in Africa or Central Asia, which is a main target for Chinese investment. And if you've seen anything in the past couple of years, I think the Belt and Road Initiative is maybe a decade old. So if anyone's has any exposure in the emerging markets, or has seen any movement because of this, I'd be interested to hear your thoughts as well. So, and if you come up with, I'm not really reading the chats here, but if you have anything that you think of later, you can of course, we can go back as well. David, you raised your hand.
Yes, I've read that the Belt initiative is being taken down. It was too expensive. It's not a project that is working for the moment, I think.
Okay, so you've seen that they kind of scaled it back then.
Yeah. It's a bit of a, it's a bold bet that didn't work out. So investors are also taking their hands off. So it's, yeah.
Yeah, I think, I've definitely heard it's expensive. Also, it's a long-term thing, particularly with the infrastructure investment. So I think if the U.S. and the European Union are able to kind of push back against China with the World Bank and do some of the investments themselves, this Belt and Road Initiative might be suppressed even further. And then probably one of the more exciting parts of the U.S.-China tensions has been this Cold War between U.S. tech and Chinese tech. So as everyone is probably aware, there was Huawei, which was banned from a lot of it was banned from providing 5G equipment for the U.S. And from my understanding, a lot of the American companies are just simply locked out of China. At this point, it seems like a lot of the Chinese companies are being delisted from American exchanges. So was anyone has anyone been looking at Chinese companies on U.S. exchanges and have any thoughts on how, further escalation, particularly of delisting in the U.S., might affect their investments? Trying to check these chats as well. Yeah, I agree, Rob, that a lot of the I think Rob, you need only sent it to the panelists, but yeah, the Chinese have a very long-term strategy. They tend to think in decades, whereas in the West we have a tendency to think in terms of 4 years or 2 years, or whatever the election cycle is. The Chinese have a tendency to think in the very long term. Yeah, I wouldn't put too much stock in them pulling back a little bit right now. Yes, so also in the tech space, I know some people talked about biotech earlier. The Chinese have a tendency to be much more aggressive in testing biotechnology and genetic therapies and these kinds of things. So has anyone been able to has anyone done any research on Chinese biotech companies or have any thoughts on how the US and China might compete in that space? Yes. A lot of silence. Okay. So then on the climate change aspect, of course, Biden wants to re-enter the Paris Climate Accords. And I didn't know this. This is why I put it in this slide. He supports nuclear energy, and this is interesting. I think from a not an investment perspective, a political perspective, because nuclear energy has a tendency to be kind of a boogeyman. A lot of people don't really dislike nuclear energy because of accidents. Fukushima is often brought up, of course, Chernobyl as well. So I was interested to hear that Biden is a supporter of nuclear energy. He is not a supporter of the Green New Deal, but he would like to invest quite a bit of money in green tech. And I think green tech is another area that the US will compete with China, largely because the Chinese have taken somewhat of a leadership role in putting out a lot of technology for things like photovoltaics and this kind of thing. So is anyone interested in green energy or hydrogen or nuclear energy or anything like this, or have any any investments in these areas?
I don't have any investments in this sort of thing, but my sort of 2 pence worth, if you like, is we should be moving away from nuclear energy and moving more and more towards obviously green energy. Around where I live, there's solar panels everywhere. I personally think that the green energy side of things still got a lot, potentially a lot of growth. It's something that I keep meaning to sort of really look into and just see if there's opportunity there in terms of green energy.
Yeah. Okay. Yeah, I think it's something that's it's still in its infancy. So these things are starting to become much cheaper. I think Ruzbe, you had had a story about First Solar. I don't know if you want to talk about that maybe a little bit later. But yeah, there's green energy is something that's a lot newer. Brian, did you want to say something?
Yeah, just a quick comment.
Sure.
Green energy sounds great. The problem is that the grid is basically one massive just-in-time delivery, supply chain, and unfortunately, renewables and green energy generally isn't produced when we want it. It's produced when either the wind is blowing or the sun is shining. And so the very big problem that we have is there's not enough base load. And the only way to get a decent base load is really nuclear or significant battery storage. And that battery storage, there's some companies that are doing stuff like Ambri is one example. But until we can get enough battery storage to be able to provide the base load, to smooth out these kinks, I think nuclear is going to have to be there. Is going to have to play some role. Just my 2 cents.
Is there any companies that I could potentially look at that are sort of looking into battery storage? Any companies you can mention that might be a good starting point for me?
Well, we have talked a lot about Tesla, but in a different context.
Yeah, as though Tesla, they're looking at that and doing different types of solar panels for the roof as well. But I think that's more of a side benefit, isn't it?
Tesla did roll out a pretty big project in Australia. Elon was talking about that about 18 months ago. And that was because of this problem. They relied too much on renewables, and eventually the grid became unstable. And what they really needed was a great big battery to be able to stabilize the frequency of the grid.
Yeah, I've heard a lot about Tesla and batteries as well. Rob, you can go ahead with the hand, and then maybe Kaushik.
It's really about the renewables. America, for example, has the Rockies, for example, and that simply isn't being used enough, shall we say. If you take countries like Norway and Switzerland, Norway has a surplus of electricity generated from hydro sources, which they struggle to consume at home and sell overseas. Switzerland has something like 35% of its electricity generated from hydro sources. If that is tapped correctly in countries that basically have mountains, it's a problem in Australia, but elsewhere, there are huge opportunities there which are not being fulfilled for all sorts of reasons. But there's a long way to go yet before green is, how should we say, ruled out. You don't need to store it. You can generate it on demand. You just shouldn't focus on wind turbines all the time, because you can't use those on demand, not so much anyway. And that's it, really. That's my point.
Yeah. There's a saying that geography, I think it's geography is destiny. So yeah, if you have a lot of mountains in your country, and you have glaciers on those mountains or a lot of rainfall, you can definitely take hydro as a source. If you're close to a geothermal spot, you could use that as well. But I do think that something to smooth this out is either non-renewable or something like nuclear, which of course is non-renewable but very long-term, will be necessary. I think there was someone else that wanted to say something on this topic. If you want to come back, you can raise your hand. And then, so one other thing with the Biden presidency and a Democratic Congress is student debt. I mean, this was quite a huge campaign issue, and currently I think there's 1.5. It might be a little bit higher at this point. Of course, we're talking about trillions of dollars here, so a little bit higher. I mean, 10% difference is, that's quite a bit of money. But the Biden has put forth some ideas about having free public college for families that are making under $125,000 a year, and also loan forgiveness, expansion of loan forgiveness. So currently there are loan forgiveness programs in the U.S. One of the most popular and most well known is for public servants. But he would like to expand this a little bit further. So is anyone invested in, and you don't have to answer, of course, but is anyone invested in for-profit education? Of course, for-profit education wouldn't be part of the public sector, so they wouldn't be a beneficiary of these kinds of policies. But if anyone's invested and has anything to say, I'd be interested in hearing that as well. Maddie, did you want to say something, or are you just unmuting your microphone?
I'm still thinking if I want to share it or not.
Okay. Yeah, it could be a little controversial.
Honestly, I'll tell you, twice in my 21 years, I lost money in a bankrupt company, and one of them was in the for-profit education. It was in 2011, I think. It was just I don't know. It's a very bad industry. I learned that in the hard way, and the reason for that is that well, you know, for-profit education, the method they did, it's first taking a lots of money from student. On the other hand, the student weren't really prepared to be or to find work or anything like that, and many of those companies were out of business. I don't know how this business look like today. I guess it's more regulated. So but if I were to look at any of these companies at this industry, I would do a deep analysis to see if I understand the regulation there. And when Democrats are back to the table, they're gonna come very hard on those companies again, and on the financial companies for subprime loans and all these things that were enjoying the Trump administration. Now they're gonna be under the eye. So that's probably something I would be very careful of.
Yes, that's a great point. There are a few of these industries, particularly subprime mortgage companies or more predatory lenders, as well as industries that may be perceived sometimes as less ethical. They will have a lot more regulation put on them, and one has to be wary of class action lawsuits and that kind of thing. And then the final point that, I mean, obviously, as the in the office of the presidency, there's many more issues than this, but I think one that impacts everyone on this call is an increase in the capital gains tax. So currently, capital gains tax in the U.S. is 15% as long as you hold the investment for at least 1 year. And I'm not I'm not sure exactly what Biden wants to raise the number to, but there is interest in raising the capital gains tax. So does anyone want to say anything? Well, I'm to have some investments in the U.S. Does anyone have anything to say about how capital gains might impact their investments or their investment behavior? Will you be more interested in holding long term if there's some kind of break in how long capital gains taxes are applied? Yeah, go ahead, David.
Yes, it's also a big discussion here in Belgium. The story is that it's the politicians are afraid to really they want to take the money, tax the rich. Huh? So we have a fair, I think, a capital gain tax when you have a portfolio of 1 million, and I think it's about 20%, but I'm not sure. Also, there is no holding period attached to it. But it's a very sensitive topic here. Will it impact my behavior? Well, no, because I don't have 1 million yet. I hope I have in 20 years. Since I'm buy and hold, I never buy something to trade. So it works in my favor, actually. And I think it might incentivize also the right behavior in the market. Because of the tax, you will hold longer your stocks than you perhaps otherwise might do.
Yeah, that's an interesting way to approach it with the minimum portfolio amount. And this brings up a question of should people that are investing small amounts in more democratized platforms like Robinhood, should they be taxed the same way as someone who's is someone that's investing out of a family office or someone who's a high net worth individual that's investing a lot more slowly?
I think they should tax those Robin Hooders.
but isn't that there today this issue? I mean, there is a long-term capital gain and a short-term capital gain, so that should prevent from people to invest for the short term, no?
Yes, I mean, I can only speak for the U.S. I've never invested outside of the U.S.
Oh yeah, no, I meant to the U.S. as like you the same.
Yeah. There's at the current rate, if you hold an investment for over 1 year, there's a 15%
Right.
tax. If it's less than 1 year, it's taxed at whatever your wage would be taxed at. So it's I mean, yes, there is already an incentive to hold it longer term, and Biden is interested in raising that 15%. So even if you are holding long term, then it'll be a little bit more expensive, which would close the gap a bit between someone that's doing more of trading, like a couple of months, and then someone who is holding long term.
At the end of the day, if you look at 100 years, whether if it was with higher taxes, lower taxes, average taxes, the market went up because the world is growing. So I wouldn't change any of my thoughts about tax increase whatsoever, even if it's Democrat or Republicans or things like that. I would just concentrate on the particular company I'm holding. And then that's what I guess people should be care about if the company is making money. By the way, that's why always Buffett, when he does any analysis, it's for earning before tax, because tax is a very subjective place. I mean, you can buy a company in one place, you can be a holding company, so you don't pay tax at the lower end. So that's how I look at it.
And also, if you see, guys, all those things, if you see through the years, every year we talk about something else.
Right.
It was the tapering, then it was something else, then something else. Now it's the corona. And if you look back, none of these events was so, I mean, we always see, so maybe it doesn't make so much sense to try to guess those things. So I will agree with you.
Yeah, I saw a little bit earlier in the chat. Someone mentioned that macro is very important, but it's not knowable, and I agree with that. I think
was me.
Okay, yeah. I mean, I think that's true. I think there's way too many moving parts, and it's not possible to really predict out, with any accuracy. So yeah, okay. I think that's about all I wanted to say about Biden and the his policies. I don't know if Roosevelt wants to come back, or I don't even know if he's still.
I'm here. I'm here.
Okay.
Yeah.
Does anyone have any questions? I mean, not that I can necessarily answer them, but and I know we're over time here. But if anyone has any questions or anything they want to talk about with Biden, we can do that too. And if not, Roosevelt, you can do whatever your closing is.
Thanks, Corey. So guys, I think we've run significantly over time. There were a few more slides, but I think we can do it in the next meetup. So we'll close today. We'll try and do this on a monthly basis. If you have any other ideas, just ping me. You should have received an email from me or reach out on Meetup, any of that. Cool. And anything from anyone before we close? Any thoughts or any questions or anything?
Do you do this every month? Sorry, do you do this every month, Roosevelt?
Yeah, when the markets were fairly valued, we used to do it twice a month. Now usually it's not much to discuss on a value investing basis, but we'll try and do it once a month, I think. And guys, if you want to present, please, it's a community, so we need presenters. You can present on any topic you like. Yes, Simon, go on.
Oh, I was just going to say thanks to everyone more than anything. As a new person, I've been sitting here, writing things down, etc., etc. And some of the stuff everyone said has been absolutely brilliant that I never would have learned at all. So I just want to say thanks to everyone's input. It's been brilliant for a new person.
Perfect. Thanks.
Yeah, and I'd like to add a quick comment. I think over the Christmas period, I read an incredible book, which is great for all people getting into finance. It's called The Psychology of Money. And it's completely opposite of value investing, because it actually talks about the emotions of money. I highly advise everyone on the group to read this book, because it decouples, it says the reality of how emotions get invested when money matters come into play. And that's not only investing, but most money matters in life. I think it's a very valuable read.
Could you post the title?
Yeah, it's The Psychology of Money. I'll post the title.
Okay, thank you.
Rusbach, I would recommend sharing with everybody the last week Howard Marks memo.
Yes.
It's one
Sure.
of the best I've read for many, many years, because finally someone very, very well known talking about the loud, where everybody is afraid to say there is no such a thing, value investing. I mean, value investing, growth investing, at the end of the day, we all want to buy something that it trades below the intrinsic value, but it doesn't mean that we cannot pay 15 times earning or 20 times earning, or it has to be below tangible book. And I think Howard Marks really addressed that in a way that explain you that value investing is just about understanding what you buying, and it's not necessarily mean that one company it's a growth, and no, it's never going to be value investing. So I really think it's worth reading. 18 pages, really worth the time.
Yeah, sounds good. Now I'll share it out with the group. Brilliant. Thanks a lot, everyone. Have a nice evening.
Sure. Thank you so
See
much,
you
and
next
feel
time.
free,
Take
and
care.
hopefully the COVID will be behind.
Yes, hopefully. Thanks a lot.
Thank you, Rusbach.
Cheers.
Cheers, guys.
Bye.
Bye.
Take care. Bye.
Bye-bye.
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 Bye bye.